All right, good morning, everybody. FOMC day. So looking at what we've done in the overnight hours, it's very likely we're going to be in a hurry up and wait mode. That puts us sideways into 2 o'clock. Now, we've seen in history setups like this where we're waiting on something and then it doesn't take much to move us ahead of whatever it is we're waiting on. So if we get some news today that was unexpected or that maybe gets us a little lift, then a lack of volume can really move markets. I know that's something that newer traders probably struggle with, but the idea is if there's a lack of volume, then it doesn't take much to move a market. It's all about liquidity. So while the base case argument today is we're going to wait on 2 o'clock, wait on data, be ready for a move. Keep your eye on the news. We take a look at what's going on around the world. Japan is basically flat with the Dow. China up a quarter. Then we got the S&P, the NASDAQ just barely above that, with the Russell more than a half and closer to 3/4. So everything is basically where we left it yesterday. We're going to get a little bit of jobs data today. This goes to the heart of what the Fed is doing. Want to pay particular attention to these numbers as they come in. This could be some of what moves us today. All right, so while the base case argument is that we're not going to really move much into FOMC, if we get a number that shocks, right, that's the forecast number right there, 220. If that number shocks, then absolutely we could move. Don't want to just lean on the idea that we've got one theory and that we're not willing to adjust. Japan's still a big deal. So tonight, really know what you own as we go into the close today, considering what we can get out of Japan on the overnight hours tonight. Yeah, that was a lot of talk this morning about what's going on. Bank of England, they got some surprise numbers. I had to relog this morning. I don't know if anybody else was having issues with Thinkorswim. Every once in a while, just wants to do something weird. I think maybe it's an indicator that I'm working on, but who knows? All right, we got a normal ADR this morning. We're in the middle. There's really no edge on one side versus the other, but we can see that they're not hedging. Everything is fine. And we're up 0.25%. So we're slightly closer to the upper edge than we are the lower edge. But at this point, there's no basis or lean towards one end or the other to say, I think we got a better chance going, up or down. We're waiting on data. It's very likely that we could chop between these two red lines. I think we'll chop even lower and less range than that, but we're just in wait mode. the floor pivot from yesterday versus the floor pivot of today. Today's pivot is higher. It's got a really wide channel, which implies a sideways day. It implies that breakouts, if we get one, fails, or that it doesn't have legs, it doesn't continue to run. Price opened above that, which is bullish. And we're above the floor pivot on the week, which is bullish. So far, we have an MDP for the second day. Yesterday was an MDP. It was a missed daily pivot. We didn't hit that floor pivot yesterday. So that counts as one. So far today, we haven't hit the floor pivot, but the day isn't done. So we can't count this as a missed pivot yet. Looking at the volume profile, we're still not seeing like an iceberg or a ceiling in this case. We're not seeing a significant level of volume right across those highs. But we are seeing supportive volume when we fade back off of those highs. We're still not getting clear signals that this is going to flip over and dump back down again. Yesterday's record volume at 272. It's impressive. It's going to go down in the history books. I haven't seen one like that before. Today, we're back into a more normalized range at 85. That's on track, right? That's better, a lot better. For a move to the upside, we got the call wall, the upper ADRs, and this other red line, a couple of them. They're just options levels from spot gamma. They're not big ones like the volatility trigger or zero gamma. All of those are still below us, but they are levels. And then we can add to that 6,000, the round number, 6011, the cog line, 6032, which is really close to where the call wall is. For a move to the downside, we've got a lot of stuff down there that very likely would act supportive if we were to move in that direction. 3-week moving average, 10-day, 20-day volatility trigger, zero gamma, plus all the cog lines and these other red lines, which are just more options levels. It is worth noting that we're hitting a key level, 59.75, from a measured move. That would be an OCC, opposite candle color, once we get there. Now, I did that on a weekly chart. So when we put it on a daily, that'd be what we're wanting to focus on. We should expect a little bit of digestion here. Now, once we get that opposite candle color, we can redraw the levels, line it up for the next move higher, and mark out the pullback level that it needs to stay above. But at this point, current candle in play, right? So we got to let this one finish out. This is the cumulative volume index, and it's for the NASDAQ. If you look at the cumulative volume index on TradingView, instead of just looking at the NASDAQ, you can look at a combined indicator of all the markets, the Dow Jones, the NASDAQ, S&P, all of them in one indicator. Think of it as net volume, net buying when it's pointed up, net selling when it's pointed down. I added the Bollinger Band, the other moving averages around it, just for a little bit of context. Collectively, we're still looking at net buying. So everything is still strong. It's not just in one single market, and it doesn't matter what I have up here. It's not looking at that, right? It's looking at NASDAQ. So it ain't done, right? It's kind of the long and the short of it. It ain't done. $10-day, 30-minute volume profile with TPO. We're not building out a significant level of volume up here yet. If we fade back, we've got a lot of structure and the point of control at that 58.60 area. This isn't likely to change anytime soon. Throughout the next couple of days, we're going to lose this volume in the middle, and then it's going to have to readjust. If we stay in one spot, maybe we can build out enough volume to challenge this lower level, maybe. Otherwise, when this point of control moves, it's very likely going to move down here into 57.20 area for now. We have a new VPOC to add with the one that we got yesterday. $59.34.75. There's a cog line at 59.32. So, it's just above that, like a front run. Same way as this one at 58.01. It's a front run on 5,800. Still, we're stacking them up. We got two VPOCs now, back to back. And this 5x5 this morning, it really highlights the low range. We have a very narrow IB. Right? The IB is the initial balance. Now, initial balance is a lot like an open range. The difference is open range is arbitrary. You can decide if you want a 5-minute open range, a 30-minute, a 1 hour. But with the initial balance, it's always 1 hour. You don't get to choose. You can have an initial balance for every market's open. So for us, it would be 6 o'clock last night, but you could do one for Asia, London, and then you could do one in 9:30 if you want to. That initial balance ties into a lot of things. What kind of day we think it's going to be, what our expectations are for breakout possibilities. It all starts with the initial balance. Today, that's not going to be too overly impactful because it's more about FOMC than anything else. But it's something to consider how much you know about initial balance and how we can use it to define what kind of day we're expecting. We're still 3% above the 10-week. That's kind of the sweet spot. We like being above that 10-week far enough that we won't gravitate back to it. And we don't want to get into like 4.5 to 5. You get that far away, then we start getting into like mean reversion scenarios. 2.5 to 3.5 is kind of the sweet spot. It's right where we would want to be. That's healthy. And 1.8% above the 10-day. That's a little stretched, but we've been higher than that before. When we look back, certainly got a lot of examples of having been higher than that. It is a bit stretched. Just remember the markets can stay irrational longer than you can stay solvent, right? So you don't want to short it just because you think it's gone too far. That would be a bad idea. Wait to short it till you got some good signals and reasons to short it. I believe the last time he won, the market went up 10% right off the top, and then it ran for like 6 months without ever having a pullback more than 2%. So don't stand in front of that. All right, Bitcoin getting a little bit of a pullback. It's down 1.25, but it was up more than 10%. So to put it a little bit into context, it moved 10%. Having a pullback of 1% isn't a big deal, right? It's healthy. It needs to pull back a little bit. So Bitcoin down this morning, I wouldn't necessarily see that as a negative. Looking at the things that are up, we've got the S&P Momentum Index up almost 5%. Semiconductor groups, China ADR, Nat Gas, which, I mean, yeah, who cares? The Mag 7 group, biotechnology groups, expanded technology groups, cloud computing, which normally you don't see cloud computing up much in the pre-market. Usually it's like an algo print or something. So we'll go and look, but I wouldn't expect too much out of that one. And then regional banks are up. So while we don't have everything up at least 0.5%, we've got almost everything moving in the right direction. All right, it says ag is down also, but it's just this little print down here. Give it a little time, see if it develops into something more than that. It has been a continued decline, though. You can see the simple trend. We're headed back towards that angle year-to-date anchored VWAP. Crude also down. And after Bitcoin's run, got Bitcoin down this morning. Really looks like it's just pulling back to the half of yesterday. See if it can find some support there, rebalance, and then continue this move. Solar getting a smackdown that continues, which kind of implies we're not done with that move in the TNX yet. It says we've got a technology ETF that's down, but it's just an algo print at this point. And I thought I saw XLK up on the other side. So pot stocks getting a little rebound after that significant drop yesterday. It's just very likely a dead cat bounce. We don't see this changing anytime soon. China, through both of these are showing that China's up. So Baba, Baidu, JD, PDD, all those should be up. Neo, XPEV, Lee. Continuation in industrials, and they shouldn't be moving this way. It's a little extreme, but it is up. But it's just a print at this point. We're not getting a lot of flows there yet. Semiconductors continued that move from yesterday with nice breakout this morning, still trying to push. Watch this one for a rug pull. When you look back at this wick here, that's what we got to be concerned of. And even if we get through that wick, we've got this level up here. That's going to act like a gap that needs closed, a liquidity event. So that's at 259. It's not spot on perfect, but pretty close. 259.5. It's not too far away. So the worry is that this is a gap up and then they do the rug pull at the open and we fall back down again. Uranium's up, but still well within yesterday's range. Gold miners, we still got this trend that we've been working on, and we're on the lower edge of that structure. So expectation is it's going to hold the line here, begin working its way back up. I mean, it's absolutely possible that we break this lower structure and begin working back towards year-to-date anchored VWAP. If you're looking for a short, that's the target. Right? Get back to that. Twenty 20% of the S&P is up 0.5%. Of course, we got some semiconductors in there. We need those. And then we got a couple of Mag 7 names. That's exactly what we would want to see if we're looking for a rally day in the market. Semiconductors and Mag 7. The problem is we're supposed to go sideways into FOMC. So keep your eye on those Mag 7s. They could propel us into a breakout today, especially on the lower volume. And if they get some assistance from the 0-day flows, we could drive through lunch before we finally stall out and wait on FOMC. %31 of the NASDAQ is up this morning. At least 0.5%. All those semiconductors in there, right? And then, of course, a couple of the Mag 7. So that would be the base case argument at this point. We're going to hold the line, wait on data, and because of the Mag 7 and semiconductors, we could continue to drive to the upside all the way into, say, 11:30. Just remember, we are getting econ this morning, and that can flip us in the other direction. So if these job numbers surprise, then we could start working our way down through previous levels. It wouldn't even put us in a bearish market environment to go, say, halfway through yesterday's levels from the Globex high down to like yesterday's RTH low. Going anywhere inside of that, and it still wouldn't be bearish on the broader market. Keep your eye on the clock, wait on the data.